Hello, everyone. I got a great question tonight from someone in the Bookkeepers Club group, and I thought this is probably a question that many people have, so I'm just going to make a video about it. I'm Lindsay Kline, founder of Great Bookkeepers Wanted, empowering bookkeepers and the businesses that need them. So the question that I got tonight was, what are the differences between an EA and a CPA? And what should we recommend to our small business clients for tax services? So an EA, an enrolled agent, that is governed by the IRS, the Internal Revenue Service, and it's 100% tax centric. Every part of that exam is about taxes. The first part is all individual taxes. The second part is all business taxes. And the third part is general compliance. So it's a 3-part exam. There's very little, if any, requirements before you take the exam. I think pretty much anyone can sit for the EA. I have an enrolled agent license. I was able to get it in 3 weeks, thankfully. I booked one per week and banged it out in 3 weeks. Now, I don't know many people that have done that. And I'm sure that's largely in part to the fact that I had a plethora of experience leading up to that I could pull from. The CPA, I would not have been able to do in 3 weeks. There's no way. Much harder. And the pass rate is much lower. I believe I read the pass rate for the enrolled agent is somewhere around 60-70% of people pass it, whereas the CPA is more like 30 or 40%. So it is much harder to pass that exam. Additionally, there are a lot of requirements you have to meet before you can even take the CPA exam. Now, everything that I'm going to say about the CPA exam, it could be different in other states. I am only familiar and only somewhat familiar with the requirements in the state of Texas. But the CPA exam is governed by the Board of Accountancy in each state. So what's true here in Texas may be completely different in another state. So just know, if you want to know specifically about a state, you'll have to look up and do some research for it. But here in Texas, you have to have quite a bit of college credit before you can even sit for the exam. In fact, many people get a master's degree before they sit for it because so much college is required, including a big chunk of accounting courses. You can get it with a bachelor's degree, but if I'm not mistaken, you would have to actually get more credits than is included in that degree before you could sit for the exam. Additionally, you have to work under a CPA for a period of time, I believe it's a year, before you can sit for it. And the CPA has 4 parts to the exam. Each part costs about $750, so it's definitely not a test you take lightly. You may be surprised to learn that very little of the CPA exam is tax related. In fact, if I'm not mistaken, only one part of the 4 parts have tax questions. So the EA exam is 100% tax, whereas CPA is about 25% or less, and I don't know that for sure. I don't know the exact percentage, but much lower percentage of CPA is related to tax. There are many fields that CPA go into that have nothing to do with tax. In fact, I looked this statistic up. About 60 to 70% of CPAs do not go in anything tax related. They might go into audit, they might go into a controller, CFO role, some kind of advising that has nothing to do with taxes. I met a guy at a networking event recently who was telling me about his wife that's a CPA, and he was joking around that he couldn't understand why she couldn't do their taxes. And I remember telling him, actually, there are a lot of CPAs out there that don't know much about tax at all. They knew enough to get through college and to pass the exam, and then they may have never looked at another tax-related thing since. much of the CPA exam relates to big businesses that have audit requirements with the SEC, that have to do GAAP, that related to FASB requirements and international accountancy board requirements, things like that. Stuff that most small businesses will never have to worry about. That is what most college courses that I took in college, and most of the CPA exam is centered around public companies that have to deal with SEC, SOX, all those kind of regulations. Things that like happened with Enron and these big scandals, right? That cause all these new regulations. Stuff that, again, most small businesses don't have to worry about. Most small businesses are cash basis and don't have to worry about GAAP. They don't have to worry about any of this. So a lot of what CPAs have to learn and know for the test is completely irrelevant for most small businesses. So know that. There are many CPAs, and some that I've personally met, who have a lot of experience in industry or audit, and they decide one day that they're going to start a tax firm, but they actually have zero experience in tax. So I would say if you're advising your clients, the first thing to advise them is make sure whoever you hire to handle your taxes actually knows taxes, actually has experience with taxes. So that would be the first thing. Now I'm going to give you a little bit of insider information on CPA firms. I have worked for numerous CPA firms in my career, and I have networked with many more. I'm going to give you some insider tips here. Every CPA that I've worked for, and many that I know, rate their clients. A clients, B clients, C clients, D clients, and then those they're about to fire. Very rarely do small businesses get into the A-B category. These are not clients that are paying their bills and keeping the lights on. They have much larger clients. They're A and B clients that are doing that. So typically how I see this play out is these small businesses hear about or see the reputation of a CPA firm. They go have a meeting, a consult with the CPA that has their name on the door. They like what they hear. This person seems very knowledgeable, and they sign the engagement letter, and they feel a level of confidence that they're being well taken care of. And from their perspective, they're paying a lot of money to this CPA firm. It's a big chunk of their budget. But from the CPA firm's perspective, this is small beans. This is not even a B client. So what typically happens is that tax return gets handed to an intern or a first-year CPA, someone that is low man on the totem pole at the CPA firm. And maybe the CPA with his name on the door or her name on the door is looking at that tax return. Maybe. So I don't think that many small businesses understand how little they're actually being serviced. So I suggest, this is my recommendation to small businesses, is find a solopreneur. Find an EA or a CPA that does not have a team, it's only them. And then you have complete assurance that they are actually the ones completing the return. They are the ones looking at your stuff. They're not just handing it off to someone else. I can tell you from personal experience, I used to have a solopreneur EA that handled my taxes, and she was phenomenal. I loved her. She was on top of it. I miss her. She retired. And then I made the mistake of hiring a CPA firm. That was a big mistake. And I literally am going to use them 1 year. I'm done. I am trying to find a solopreneur. So I am, as we speak, on the hunt for this. Because the tax returns that I received from this CPA firm had a plethora of mistakes on it. Some of them were silly, some of them were big. Thankfully, I knew enough about reading a tax return to catch that, but most of your clients don't. They don't know what they're looking at. So a huge value add that you can give to your clients as a bookkeeper is to be a second set of eyes and look at it before it gets signed. I have seen so many mistakes over the years. I posted a video recently about $100,000 mistake that was made because the CPA firm used accrual financials for a cash basis tax return, overpaid taxes significantly. And our bookkeeping firm is the one that caught the mistake. So, if that's not something that you feel comfortable with, I would suggest get someone on your team that can do it or partner up with someone that can do it. It's a huge value add to your client because they just don't know. They don't know what they don't know. And somebody should be looking at it. If nothing else, advise them that they should get another tax professional to be a second set of eyes just to do a review. To me, that is imperative. One vetting question that I personally find important. Now, everyone else may not see the importance as much as me. But if you follow me at all, you know how much I love my balance sheet. So one question I always ask is, do you include a balance sheet on the tax returns you prepare, even when it's not required? If they say no, that's an automatic deal breaker for me. To me, that's just bare minimum. Include a balance sheet in the tax return, even if you don't have to. That way, for all of eternity, in the future, you can always tie back the books to that tax return, no matter what has happened to the tax preparer. No matter whether they've moved on to a new firm or that person got hit by a bus, you can always go tie it out to the balance sheet. So that's important to me personally. So there's a vetting question that you can add as well. But it's something I'm going to think about and possibly make another video to give specific vetting questions that people could use to find a good tax professional. But those are the main things. Get a solopreneur, make sure they have tax experience, and if you care, ask them if they include a balance sheet. Until next time, this is Lindsay Kline, empowering bookkeepers and the businesses that need them.